Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW24 traders, and our website is www.stochastic-macd.com. For all trade, we use the 5% money management rules and apply stop loss in all trades. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instruments. All right? Today is the 17th of April 2014, and the time in London is 43 minutes past 1 p.m. in New York, 43 minutes past 8 a.m. The title of this video is how to combine the ABCD chart pattern and the wave principle. All right, what is the ABCD chart pattern? How one can trade the ABCD chart pattern? Now, what is the wave principle? In this scenario, we're going to combine the ABCD chart pattern and the Elliott wave cycle. All right. At the end of this video, one will be able, to gain new, trading skill and understand, how one can combine, the Elliott wave cycle and the ABCD chart pattern. All right, let's get started. All right, I'm going to start drawing lines on this chart, and I want trader to pay attention carefully to what we are discussing here. All right, pay attention carefully. According to the wave principle, because we want to combine the ABCD chart pattern and the wave principle, according to the wave principle, if a financial instrument is in a bullish cycle, the financial instrument will move in 5 waves. All right, pay attention carefully. 5 waves. The 5 waves that we see, that's what forms what we call, attention please, the motive wave. All right. All right. So first wave, second wave, third wave, fourth wave, and the fifth wave. All right. Very often the third wave is the longest wave, and the fourth wave must not overlap the first wave. So from here to here on my drawing, this is the 5 waves. After we see the 5 waves, we have what we call the corrective phase, which is the ABCD chart pattern. The ABC correction, not the ABCD chart pattern, because we are talking about the ABCD chart pattern and the wave principle. But once we see the 1, 2, 3, 4, 5 waves, 1, 2, 3, 4, 5 waves, we will expect a correction. The correction is formed of ABC, not ABCD, but ABC correction. All right, the price will come back down in 3 waves. All right, so from here, I'm going to highlight it here. I don't want to remove my lines here, so pay attention carefully to what I'm drawing on my chart. All right. So there was a trend from here where my cursor is, and the trend ends here. Then we have what we call the correcting phase, which is the A, B, C. So the ABC is what we call the profit taking. So the bullish traders that were, or the bullish market participant, the bullish investor that were buying the stock from here all the way up here, at this point in time, they will say this is the harvest time, so to speak. They want to take some profit. Nothing wrong with the company, but people want to take some profit. Also, they know that the price does not go up forever. There will be a time when the price will pull back, So they will take profit. And very often, it will be in 3 moves. This is what we call the corrective phase, A, B, C. Now, the Elliott wave cycle is formed of the motive wave and the corrective wave. All right? So the motive wave is from here all the way up here. So the motive wave is formed of 5 waves, and the corrective wave is formed of three waves, A, B, C. The motive wave plus the corrective wave is what is the Elliott wave cycle. Now we understand what is an Elliott wave cycle. This is very important for us for the purpose of this video because we want to know how to combine the ABCD chart pattern and the wave principle. So we are using rules about Elliott wave principle that stated that the Elliott wave cycle is formed of the motive wave and the corrective wave. Now we want to combine the Elliott wave cycle and the ABCD chart pattern. Do not get confused because we talk about ABC correction. Now we are also talking about the ABCD chart pattern. Now we know what is the Elliott wave cycle. What is the ABCD chart pattern? The ABCD chart pattern is a pattern that is like this. I'm drawing now. Follow me on my chart. This is the ABCD chart pattern. Now, whenever we are talking about the ABCD chart pattern, when one is applying the ABCD chart pattern, one must separate the theory from the reality of the market. I'm going to discuss here the theory relating to the ABCD chart pattern. According to the theory, so this point, that's what we call the A, this point we call it B, this point we call it C, and this point we call it D. So this is the A, B, C, D chart pattern. In theory, the distance from A to B, or the magnitude of the price move from A to B, is equal to the magnitude or the length of from C to D. So the AD is equal to CD. This is the theory. Sometimes, due to Fibonacci extensions, all right, or the fundamentals that are governing the financial instrument, the distance from C to B can be longer than the distance from A to B. Sometimes the distance from C to B can be shorter than the distance from A to B. But generally speaking, when we are talking about the ABCD chart pattern, in theory, we are assuming that, the distance from A to B is equal to the distance from C to D. This is the ABCD chart pattern. Now, the question or the purpose of this video, how do we combine the Elliott wave cycle with the ABCD chart pattern? All right, so now we know what is the Elliott wave cycle. I'm going to start removing my drawing from this chart. If there is something else you do not understand, you can put comment below, or you may, replay the video, all right? So stay with us, and as we continue with this demonstration about how we can combine, the Elliott wave analysis, and the ABCD chart pattern. Hold on a second as I'm removing my line one by one on this chart. I do not need them anymore because we clarify, the ABCD and the Elliott wave cycle. Now, before we continue, I would like to say to traders that very often the financial instrument, that will display, the ABCD chart pattern, as financial instrument that are very, very bullish. So when we see the distance from A to B equal to the distance from C to D, very often this is a characteristic of a dynamic, bullish, financial instrument. All right. Why? Because you see, traders that were buying the stock during the session from A to B, they were very bullish. All right. So they took some profit. During the profit taking, the price went down from B to C. All right. If the distance from C to D is equal to the distance from A to B, it means that those buyers, because we are now in the uptrend. If you are in a downtrend, we have the ABCD chart pattern in a downtrend also, so do not forget that. So traders that were buying or investors that were buying the stock during the session of A to B, after they took profit, all right, they will go back to Google Finance, to Yahoo Finance, to analyze the fundamental, to see the general market. Is the market bullish? What is the market cycle itself? Now we are talking about what we call okay, the trading triangle, the market first, the sector, before the individual financial instrument. So once they've done their due diligence, they check the fundamentals, all right? They know that nothing has changed. The company is still making money. Their product is still selling, okay? Their market share is still increasing. So the stock, okay, is in fact discounted during the session from B to C because fundamentally speaking, the share went below its fair value, so to speak, or the share is below its a book value. So something that normally should cost $70 is now $10. Okay, you must be crazy. Okay, not to buy it. You should buy it. Okay, so they've provided that the fundamentals are solid, they are making money, and their future prospect is solid. This is very important. So we will check. Okay, the return on capital. We'll check the earning yield. We'll check the market environment. We will pay attention to the trading triangle. Once we are satisfied with our verifications, all right, we will now be happy to buy and hold again and expecting the price to continue or to start a bullish cycle because the first bullish cycle is from A to B. Now, very often, talking about the Elliott wave principle and the ABCD chart pattern, the section of the ABCD chart pattern, the A to B, very often, ladies and gentlemen, very often, the A to B is one motive wave. All right, repeat, the A to B very often for dynamic bullish financial instrument or dynamic bearish financial instrument. The section of the ABCD chart pattern, the A to B, very often is the motive wave. So we have something like this. Pay attention carefully. So there was a trend, okay, and during that trend, we will see 5 Elliott waves. Yes or no? Okay, that's what we call what the motive wave. So I'm drawing again on my chart. Pay attention because what I care about here is the understanding. I want traders to understand what is taking place, and I don't want traders to just know about it, but I want traders to understand it and to know what is taking place. All right. So here we are. You see. So if you accept my drawing like this, so this is the A. All right. This is the B. So during that time we have a bullish trend. And during that bullish trend, we have 5 waves. First wave, second wave, third wave, fourth wave, and the fifth wave. This is the end of the motive wave. You want to understand that the section from A to B very often, ladies and gentlemen, not always, very often, for dynamic bullish financial instrument, the section of A to B will be divided into 5 waves. And it is in fact very often the motive wave. All right. Now, the second part is that the distance from B to C, okay, is the correction phase. All right. The B to C is the correction phase. And very often we'll see something like this. The price will come down, which means first profit taking. All right. The dump money try to buy, not knowing that the bullish trend has ended. Elliott wave traders are paying attention carefully and will look for opportunity to sell again, and the price will come back down in 3 moves. So A, B, C. We are talking about a correction. We are not talking about the ABCD chart pattern. The ABC is a corrective wave. All right. In the language of Elliott wave, 3, when we say 3, we are thinking of correction. When we talk about 5, we are talking about impulsive wave. When we talk about 8, we are talking about a cycle. All right? Now, traders that are TSTWSY is your 8 traders know that we are talking about cycle. 8 is a whole cycle. All right? First wave, second wave, third wave, fourth wave, fifth wave. Then 1, 2, 3. In total, we have 5 plus 3, that's 8. So in the language of the Elliott wave, okay, 8 represents a cycle. 5 represents an impulsion, a motive wave, or a trend. 3 is mostly correction. Now, so the section of the ABCD, this section, A, B to C, now I'm talking about ABCD chart pattern, okay? The section of the ABCD chart pattern, the B to C, is the corrective phase, all right? So how do we combine the Elliott wave cycle and the ABCD chart pattern? We know that according to the theory relating to the ABCD chart pattern, ladies and gentlemen, the distance from A to B very often, in theory, repeat, I say to you, I warn you that you shouldn't use the ABCD chart pattern as a science. Very often, it should be equal, but it's not always the case. Talking about the Fibonacci extension, we know that the distance from A to B very often will be equal to the distance from C to D. So once we are Elliott wave traders, we count 5 waves, we see the corrective wave is completed. Now, for traders that are very new to the subject of Elliott wave, there are complex corrective waves. Though on my drawing here, I'm using a very simple zigzag pattern where the price went down 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5, A, B, C. This is a simple correction. But, do not forget this, but sometimes we have what we call complex correction. So do not be surprised sometimes. You will see it exactly as I draw you on the chart. We may have a flat correction. We may have, other complex correction, a double zigzag, a triple zigzag. So do not think that the way I draw it, that's the way it is always happening. But I want you to get the general picture, so I can't get into too much complication because you are my friend. I want you to get the bigger picture. The section B to C for the ABCD chart pattern very often is the corrective phase. This is very interesting to know if we understand, both the Elliott wave cycle and the ABCD chart pattern. So after an Elliott wave cycle is completed, the first thing that is coming to our mind is what? The ABCD chart pattern. It's all about the mind game in trading because why? Why is it a mind game? Somebody or some people were buying the stock from A to B, When the price reaches B for Bravo, they decided to take profit. There may be some other reason why the price went down. It's not always profit taking. Can be, the market environment at that time, the market is bearish, most stock will go down, yes or no, 2008, 2007, you remember? So, all right? So, the price went down and went into correction, Now, after the correction is settled, done and dusted, Done and dusted. That's why I'm saying to you, one must always use the trading triangle. Why? Because we are trading first the market, then we are trading the sector before we are trading, the financial instrument itself. So if you are applying this strategy, for instance, to commodity, or you are applying this to, stocks, you want to understand that we are trading a market first, then a sector before you do a financial instrument. If you are trading forex, we are trading, the market indicator, the leading market indicator, Euro USD, the forex market, the decisions that are made by the central banks, you remember the money printing, So do not forget all this, all right? So after the correction is completed, during the session from B to C, we can, project the next price target by using the ABCD chart pattern, knowing that the distance from A to B will be equal to the distance very often. In theory, I'm just repeating myself, in theory, it does not have to. Price can go all the way to this point here. So as I see the correction is completed, I check my corrective wave. I go to www.24elliottwave.com. I learn about the corrective wave pattern, understand the corrective wave pattern, all right? And I know that now the correction is completed for this particular stock. I will now go and check the S&P 500, the major indices, see the general market environment, pay attention to the central bank, what they are doing. If I am satisfied that, there is a high chance that we may see a new bullish cycle, I will set my target at a point delta here, D for delta, using the distance from A to B as my measuring stick. All right, I move some line here. So I will use the A to B as my measuring stick at the end of the correction. So this is the end of the correction. At that point in time, I'll use the distance from A to B as my measuring stick. All right, to set a future price target for the stock that I'm trading. So I will be also expecting, okay, possibly, okay, 5 waves. But it's not always like this, ladies and gentlemen. This is why I'm saying to you very often, financial instruments that are very, very bullish, dynamically bullish, will do exactly this. Sometimes you may not see it. But if you are a new trader, do not go and mark this video down anyhow, because there are other things that we know, the Fibonacci patterns, because after the correction, okay, those who understand also the Fibonacci patterns. So I don't want a video to be too long, if you understand. So I've recorded some video about, okay, the Fibonacci pattern, which you can go to and watch at www.dayprotrader.com. So you see the price went up from A to B. We use the Fibonacci retracement tool. So it went up from here to here. So if my correction has ended here, that's 78% Fibonacci retracement level. We will use Fibonacci extension levels. So what I say to traders, do not stick to one Fibonacci extension level. Put all of them on your chart. So we will now remove, once we know the Fibonacci retracement level, we will now use the Fibonacci extension tool. Are you with me? Is it getting too complicated? It just go step by step, okay? Then we will use Fibonacci extension tool. You can see they are somewhere up here in this chart to see the Fibonacci target zone. We'll also use, okay, the measuring stick, the A to B, as I showed you already, and project it at the end of, the correction here. All right? You get a picture now? So very often, as I explained to you, very often, there is a high chance that at the end of the correction, we may see a new, okay, motive wave. So A to B, maybe a one motive wave, the B to C, correction, another motive wave starting from C to D. Now we have A, B, C, D chart pattern. Sometime, not always. Now, the reason why I'm speaking like this is to get your attention. Sometimes, not always, all right? We will see that the price move from C to D may be also divided again into 1, 2, 3, 4, 5 waves, another motive wave. So we have a motive wave, a correction, a motive wave, and we may see a bigger correction at this point here, which is the delta zone. This is how we combine the ABCD chart pattern and the area wave cycle. Now, I finished with my drawing, and I'll give you the bigger picture. Always, I give you the bigger picture so you may understand what is taking place here. But remember, when we are trading or we are investing, all right, we are talking about human beings. Human beings are buying, human beings are selling. I also talk to you that, I say to you that you must also know about the Fibonacci pattern. Sometimes the distance from C to D, which is the last lap of the ABCD chart pattern, we may have to deal with the Fibonacci pattern. All right, so there was a trend, and there was a profit taking, okay, and then the price will go, okay, up, down, and then zoom up to the target. Sometimes you may not see 1, 2, 3, 4, 5 waves during the C to D if we have what we call the Fibonacci patterns. But you will see a different ABCD. So you will see here A to B and B to C. Very often during the A to B, more than 70% of the time, you are likely to see 5 waves. All right? But why am I staying on the C to D? Because it's so important. For dynamic bullish financial instrument, you can see a double motive wave, which means the price move from C to D can also be divided into 5 waves. But sometimes it's not like that. You may only see, okay, instead of 5 price move from C to D, very often you are likely to see also, okay, 3 move. 1 move, pull back, and boom, to the target zone. This is about the Fibonacci patterns. So there was a trend, there was a profit taken, the price went up a bit, pulled back, and then boom to the target zone. Using the ABCD, okay, chart pattern, I will use the distance from A to B as a measuring stick. It's not that simple as I'm saying it now. With more experience, more okay, practice, okay, traders, investor, okay, will master how to combine, okay, the ABCD chart pattern and the wave principle. I'm going to remove my drawing. The discussion is not finished yet. Stay with us. This is very important because we are looking at, okay, United Health Group on a monthly chart, and we're going to analyze the United Health Group using the ABCD chart pattern and the Elliott wave, okay, principle, the Elliott wave cycle. Stay with me as I'm removing my drawing from the chart one by one, okay, because I don't want to remove all of them. I want to remove some of them, all right? So stay with me as I'm doing this, all right? So during the distance from A to B, in the formation of the ABCD chart pattern, we are likely to see during the A to B 5 Elliott wave. During the price move from B to C, we are likely to see 3 waves, which is, okay, the corrective phase, all right? But during the price move from C to D, all right, I will say that 50% of the time, you may see 5 waves, and 50% of the time, you may see 3 waves. Now, stocks that are very, very bullish, okay, that has the stock that have a strong, okay, balance sheet, strong fundamental, are likely to display another 5 waves during the move from C to D. But sometimes, another 50% of the time, you may see only 3 waves. This is about what? The Fibonacci patterns. If you want to master Elliott wave trading, wave count, go to www.24elliottwave.com. Spend some time to watch the videos there, all right? Because I share some of my experience with traders for free. If you want to know about Fibonacci and Fibonacci extension, Fibonacci patterns, go to www.dayprotrader.com, where I spend some time sharing few tips with traders. So we're going to look at this United Health Group, okay, American stocks, all right? So what's happening here, all right? So we can see that from here, so we have ABCD chart pattern being formed now, okay? The price went up from 1999, from this point, all the way up here. Now, I don't want to draw 1, 2, 3, 5 wave during this session. This is the A to B. We can analyze, we can use the wave principle to analyze the price move from A to B. After the A to B is completed, all right, look what's happened. The price went down. How many move? 3 move, okay? Yes or no? So do it like a child. It went down. So if I'm showing this to my son, he will say it went down from here to here. And then it went up to here, all right? I can talk more about this because this is normal for this session to be again in 3 waves. That's not the purpose of this video. And then it come back down in 3 moves. Now, I also draw on my chart something else here that I call diagonal move, vertical move, retracement to the opposite diagonal. This is about proprietary trading at www.stochasticmoney.com. Diagonal move, vertical move, retracement to the opposite diagonal. This is the opposite diagonal, the orange line from here to here. Look how it touches on the dot. United Health. It's nothing new. It's happening all the time. All we need to do is to keep our eyes wide open. And the Elliott wave theory is the pure technical analysis that allows market participants to keep their eyes wide open, looking at the chart itself, the #1 indicator. All right? It's about a purest chart analysis. So we see now, so A to B, and then B to C, which is clearly divided into 3 waves, as I explained it to you before. So once, now the correction, when a price touches the opposite diagonal, ladies and gentlemen, the first thing I would do is to go and check Google Finance. What's happening? The economy news relating to United Health Group. Okay, What's going on? Their product, their market share, okay? The market itself represented by the S&P 500. This is about the trading triangle. If you want to know about the trading triangle, go to YouTube and put in trading triangle. You'll see a video that I posted on YouTube. All right? Okay? So we do our due diligence because a correction is completed, okay, at this point in time. Now, we will use the trading triangle. We're going to check at the S&P. Where is the S&P 500 in 2009 when the price retested the opposite diagonal? What has happened? The market did correct itself, okay? In 2008, the S&P 500 or the major indices went down big time. In 2009, the Federal Reserve, the U.S. Federal Reserve, started printing money. Too much money? Well, so these, all this money should go somewhere, right? So if there's too much money, they should put it somewhere. And they put them in the stock market. People start buying stocks. So at this point in time, after my due diligence, my verifications using the trading triangle and the Google funnel, Yahoo funnels, and other proprietary trading tool, the opposite diagonal and other proprietary trading tool, I'm satisfied. Okay, these stocks, they can still make money. Their product is still usable. People can still buy it. They are buying it, yes or no. Cash flow, we check all this, and we are happy. Okay, so a stock that went up all the way to $64. In 2009, it was $15. Well, is it fundamentally viable? It's still a healthy stock? Why the stock went down? Okay, if there's no fundamental reason why the price went down. Is it because of the financial crisis that the stock went down? Is it because the investors were a bit afraid, cautious, and they pulled their money out for during that time? Okay, if I'm satisfied, I'll keep buying because I know that I'm on a winning side. Something that has cost $64 is now $15. Well, if it's pure gold, and nothing has changed, and the gold that has cost $64 is now selling at $15, you must be crazy not to buy it. Yes or no? Okay? So you will buy it. As you are buying at the point C for Charlie, the first thing that is coming to your mind is what? The ABCD chart pattern. So at this point in time, what will you do? You will use the distance from A to B as your measuring stick and put it here, yes or no? So if you put it here, you will say to yourself, all right, there is a high chance that the price will come here. Doesn't mean that the price will definitely go there. But in this scenario, as I'm showing you now, the price even went there and exceeded that level. So in 2009, I will set my price target here, provided that the fundamentals were solid, the market share is still increasing for this stock. I will set my target here and tell people that, hey, buy this stock. Buy this stock. It's below its fair value. It's below its long-term equilibrium price level. It's oversold, all right? And it's below its book value. And the business still excellent business, return on capital excellent, earning yields excellent, and the stock is now very cheap. Buy. Okay, so then I would say there's a high chance. So market analysts will be saying there's a high chance that this stock, okay, so because it took them how many years from 1999 to 2006, that's 7 years, yes or no? So we will say 2009 plus 7. Okay, it's what? 2016. So we will say for long-term investors that want to buy and hold this stock for the next 7 years, okay, analysts will be saying for the next 7 years that this stock has a high chance to go up to the zone of $74. All right, you see now? So we can use that as a market analyst to forecast that this stock has a high chance to go to $74 from this level of $15. So it's a bargain, buy. All right, you see what I've done now? All right, what I have done, I've used the ABCD chart pattern. All right, I understand that the correction has been completed, so I combine the ABCD chart pattern and the Elliott wave theory to set a price target. I did not ignore the trading triangle. because we don't want to be technical traders alone. I say to traders, we want to combine the technical and the fundamental. Yes, that's the best approach. So, all right, so we do our verification, we are satisfied, though we use other proprietary tool, opposite diagonal, and other tools, okay? We are happy. We buy $15. So look, today is now $78.19. Beautiful, yes or no? Huge profit, all right? Big time. All right? But here, what I've done, I've used the measuring stick from A to B to set my targets for this stock. Does it mean that the price will always reach the target zone? No, no, and no. If, for instance, the stocks start going up and we are very excited, and at the end of the one quarter during the earnings season, this company came out and said, blah, 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 we're going to fail to meet the analyst forecast. What will happen? The stock will come down. Will you be holding it? You will sell it straight away. All right? So, though the price went up all the way to the target zone, it was not in straight move. You see, it went up, come down, went up, come down, went up, come down. If there is a change in the fundamental, you see the fundamental is very important. If there's some bad news, very bad news, and they couldn't make money, they couldn't meet the analyst forecast, this stock, all this blah, 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 the stock will come back down big time. That will be a different picture here. But as you can see, this stock was quite bullish. This is one example of a dynamic bullish financial instrument. You see, it went up again big time and reached the target zone. As the price going up, technically speaking, we will pay attention to all the resistance level and manage the trade carefully. We can swing trade during that period, giving priority to bullish signal. You see here, all we need to do for swing trading, we will use, you see I'm on a monthly chart, I will join 2 points to have a bullish trend. So after this low and this higher low, game on. So we will expect it, you see, we will expect it, okay, here it was not easy, because the price couldn't reach the trend line, but we will be expecting it to find a support somewhere here. Now, it becomes very bullish, technically speaking. Become very bullish. What I've done now, my second trend line, joining this point and this point. So there was a low and this higher low. We will expect it to look for opportunity to buy again here, using the TSCWSY-S008 trading system. Boom. If the signal fell, we will come out. We are not going to fight the market. Don't fight it. All right? If it's going to work, it will work peacefully. All right? You see? So it went up and hit the target. Yes or no? This is one example of a dynamic bullish financial instrument, okay, that has displayed ABCD, a chart, a pattern. As you can see now, I have combined the Elliott wave cycle, okay, and the ABCD chart pattern. Remember, the correction is ABC, but the chart pattern is ABCD. The Elliott wave cycle is ABC. This one, this A here, this B here, and this C here. That's the Elliott wave cycle. Motive wave plus correction. The correction is ABC again. Okay? That's A. This move, that's what we call A. We don't call this point A. The move, this move here, that's what we call A during the correction. From here to here, that's what we call A move, B move, C move. A, B, C. That's the corrective wave. All right? There is another way we can set the target, which I'm going to reveal to you now. So pay attention carefully. That's what I say to you. Stay with us as we continue with this demonstration about how we combine the ABCD chart pattern and the wave principle. You see, in the first instance, okay, I was using the A, the distance from A to B, as my measuring stick. Okay, let me adjust my line properly, okay? I was using the distance from A to B as my projection, okay? As the correction is completed here. Are you with me? There's another way we can use it. What you need to do, you see the price went up from A to B. Instead of using the diagonal like this, we can use, okay, the height of the triangle, this triangle here. So we will draw one horizontal line. Are you with me? Okay, maybe put a bit of color into it. And you can see, moment please. 1 second, please. All right. I'm expecting to finish the video in the next 10 minutes. So stay with us as I'm putting a final touch to this recording. All right. Okay, I'll call on my, 1 second please, what I'm going to do. Okay, call on my triangle, the triangle that I'm talking about in orange. Okay, beautiful column. So you see my, first we were using the diagonal part of the triangle as our measuring stick, but there is another way we can use that for the projection of the ABCD chart pattern. So once the correction is completed at the point C, C for Charlie, instead of using okay, the diagonal, we will use the height of this triangle. So I will use the height of my triangle as my measuring stick, because some trader will use okay, the diagonal part of the triangle. Another group of traders will use okay, the height. So we want to go into their mind. So we can use the height, setting our possible future target right here. All right. You can see that the price has hit that target too. So always be aware of this projection also. So this is the, I think this is more valid. Okay, this is more valid than the first one, because okay, sometimes it's not easy to project okay, the diagonal part. So trader can use okay, the height of this triangle. So price went up, just draw the horizontal line from the starting point of A, and then join the A to B, and then join the B to this horizontal line here. All right. So then you move it like this and project it at the end of the correction, setting your target here. That's the easiest way. I think this is the best way to project the target zone from the ABCD, a chart pattern. So here again is completed. Now the price now at the target zone. Some, as you can see, professionals take profit here. You see here, they took some profit, they took some profit. Does it mean that now we should sell? We can sell if we receive a signal to sell. But the price has reached the target zone. What do we need to do? All right? This can be a subject of another video that I can demonstrate to trader, talking about the convergence signal, okay, at www.stochastic.com. Price now at the convergence point, all right? If we receive a sell signal, or we can just wait until the price starts going into a declining channel. Talking about the market pattern. If it's in a declining channel, from the higher time frame, we use the top-down trading method and start swing trading again to the downside. But when the price reaches the point D of the ABCD chart pattern, the point that I call the delta zone, it's crucial that traders go back to Google Finance, to Yahoo Finance, to do their due diligence. So you want to know what's happening now. Now, what's next? That's the best question. What next? So this is the question that the investor will be asked. What next? What's the future prospect of United Health Group? All right. So now I'm on the monthly chart. I can go now to the yearly chart to see the bigger picture. I will go to Google Finance, do my due diligence, and see what's going on. I will also use the trading triangle. So which means now I want to focus on the market. Where is the S&P 500? Check stock that are listed on the major indices. Where are they? Well, are we going to have, okay, a prolonged new bullish cycle, or are we going to see a correction? All right? If the price is going to go down, if I go back again to the monthly chart, the first and nearest target zone is this level here. Do you know? This support level here. The highest point of the first motive wave, that will be our target. You see, try to come near. Some people bought it again. All right? So this is a conversion point. You need to be careful. Doesn't mean sell and forget. But go back to the drawing board. Reanalyze the stock. Does it have a future? Okay, will they continue to go up? I think traders need to be cautious here. I will not buy crazily here. If I want to buy here, I will day trade. I will not buy and hold and forget. All right? I would prefer a nice pullback at least to this horizontal line. Okay, we will check the long-term equilibrium price level for this stock, talking about proprietary trading. We will check the book value, the fair value of this stock. Okay, and see, you don't want to pay the highest price. Okay, we want to pay the best price that is reasonable for ourselves, that is okay, more profitable for us. Otherwise, we may look for another financial instrument. If this stock, for instance, is too expensive compared to the book value, we may decide to look for another cheaper stock which we can buy. Doesn't mean that the stock is useless or it's going to go down, but we can decide, okay, to select another financial instrument. I hope you have learned something from this video also about how to combine the ABCD chart pattern and the wave principle. Until the next time, enjoy yourself and be very happy. If you like the video, like it, have any comment, put it below. Speak to you soon. We are the TSTW SYS 008 traders.